Hi, I'm Doug McKenzie and welcome to this episode of the Fintech Show. Now, in our jobs, we hear a lot of buzzwords in the industry from various different new technologies, from AI to blockchain. What do they really mean? And are we actually going to start seeing some use cases? First up, Ali Patterson speaks with Jim Marous from the financial brand to see how much banks are actually disrupting themselves to stay ahead of the curve.
Culture is a big deal. I mean, you can't move an organization without the culture changing. And realize that in most organizations, your banking organizations especially, the leaders are bankers. They've moved up the ranks, they started lower in the banking and they moved forward. In addition, they're somewhat older. They have had a very successful career. They're making a lot of money as organizations, but they're not changing. They're not doing what needs to be done. So through an evolution of thinking and getting input, I realized there were really three things that every organization, person, and professional have to do, and that is you have to embrace change. By embracing change, that means you have to let go of what you felt secure about in the past. You have to let go of your successes and say, I'm willing to change enough to change the culture. It's really about rebuilding the organization from the very foundation, but not just as a professional. So you have to do it as a corporation. You have to really embrace change and say, you know, we're in a period right now where they used to say, well, you got to jump on the train at the station and then you got to be on the train. You got to decide you're going to commit to being on the train. Well, now it's a bullet train. It's an express. Not only is it going faster than ever before, but it's not stopping at the station. So you have to jump on a running train and that train's not coming back. So if you miss it, you're going to be behind. And every day that you don't change, you're going to miss the chance to move forward and you're going to have to change your mindset. Secondly, embrace change, take risks. I'm not talking about major risks, but I use the analogy of a roulette wheel. Yeah. So you gotta put a little bit of money on red 26, a little bit of money on black 23. You gotta spread your bets around to say, if I hit any of them, I'm gonna feel pretty good, I'm gonna make my money back. But if I hit a couple, then I'm really moving forward. And risk taking is not inherently what bankers are comfortable doing. So you got to embrace change, you have to take risk. And then the most important of the three is you have to disrupt yourself. And that means taking the first two elements of embracing change and taking risk and really realizing, where do I have to be 2 years from now? And what do I have to do on my own to build a mentality, to build a person that's going to be where the marketplace is 2 years from now? And what happens is people don't, if they don't do that, what we're seeing is, and what we're seeing worldwide right now, is the reflection on disruption in the marketplace, in the world, in the economy, where people right now are protesting and voting Brexit and voting Trump in, things of this nature, mainly because they haven't been prepared for what the future is bringing. They want to go back to the past. And as I said, the train's not coming back to the station, it's left. You don't have an option but to disrupt yourself.
Next up, I went to Spain to speak with Derek White from BBVA, a bank that's intent on disrupting themselves. In fact, they've even been quoted as saying that BBVA will be a software company in the future. Where do you see the next big technologies landing, and how are BBVA going to be a part of that?
The future of the financial industry will be defined by how people interact with money and how that interaction creates data, and the technologies that underpin that are used to create amazing experiences for customers. The companies that can define the most amazing experiences for customers will define their success. And that there will be some of the 20,000 banks out there today that survive and are able to create those amazing experiences. There will be some fintechs and some big techs that provide financial services, but we believe it is truly the companies that create the most amazing experiences that will define our future. Now, what does that future then look like? That future increasingly looks like a distributed world where we will be making decisions remotely and perhaps more by ourselves, aided by the data of our own interactions with our own money. We will increasingly trust others to make those decisions on our behalf. At some point, we will trust an AI to make decisions and make recommendations for us. To when we are driving home in our car in an autonomous vehicle, we will interact with our vehicle in an autonomous way, and we will interact with our money in an autonomous way.
That's absolutely brilliant. Now, you mentioned a couple of technological buzzwords, AI, blockchain.
Yeah, so let's just touch on blockchain and AI before we get into the concrete shifts in payment and security. So blockchain and the distributed nature of blockchain is fascinating, but what's equally fascinating is to see the distributed nature of human behavior. Take, for example, the way gaming is changing behavior. I would suggest that gaming is having the same level of impact on consumer and individual behavior that the blockchain is having to the underlying fundamental technologies. You layer those two on top. Take, for example, my teenage son and my 11-year-old son, and the way they interact with their friends in a distributed social interaction through a screen, sharing what used to be me playing on the front yard with my friends in football. It's an entirely different interaction model. You take that interaction model sitting across a distributed technology model, that's fascinating. Now let's take AI. If you look at AI, many people are consumed with, and the banking industry has talked for a long time about creating data lakes, and that banking has had enormous amounts of data, and storing that data in what was considered data lakes. Unfortunately, the data goes into the lake and it never comes out. So having the data and not actioning the data is useless. The power of AI and machine learning, taking the data and translating the data into an interaction level, wrapping every interaction, those 300 interactions that our customers have on our mobile device, every single one of those interactions being data-driven, being personalized, being actionable to help people make decisions and not purely transactional. That's the power of what AI can do in changing the way people make decisions in their money in a digital world.
Over in Las Vegas, Leah Jacobiak meets with Haytham Kaddoura from Smartstream to find out some of the pioneering work they've been doing in AI and blockchain.
Okay, so tell me about how Smartstream is at the forefront of AI, how you're incorporating AI into what you do.
Following from our discussions last summer in Money 2020 in Amsterdam, we've further solidified our offering. Remember, what we said at that point in time is we didn't want to really go up to the market with another message. We're not somebody playing with AI. We have 40 years of history in this fintech space. We thought that it would be much more prudent, given our reputation and relationships with our clients, that we come up with something solid. So when we announced AI, a few banks approached us to JV with them on testing the technology, how would it apply to them. We're advancing along those lines with select set of partners, predominantly in Americas and Europe, on what are the areas that would be high priority to them. And within Q1, I guess, next year is when will be commercially available for the general audience.
And just looking at the wider picture, how is AI transforming the world of finance as we know it?
I think it's going to make it much smarter, much more efficient.
How so?
It has the ability to pick up data trends and anomalies much faster than any human can, right? It looks at massive amounts of data, makes sense as much as possible, I guess, and process it relatively much quicker than a bunch of humans can do, with all due respect.
Yes.
And that makes the banks much more responsive to addressing whether their own regulatory requirements, their feedbacks to clients, and all their stakeholders effectively, right?
How is AI, I mean, it's a very old concept, but how is that disrupting the financial services industry, and what are some of the implications for this?
Right now, we do a study every year on AI to find out where it is. What we're finding is it's a great buzz term that people are thinking about, feeling about, doing in a sense, but we're still seeing it in fraud and compliance and the traditional ways of using it. So we have not seen the transition in using AI and artificial intelligence to make an overall better experience, to be able to communicate with you better, to engage with you better. We're starting to see the beginning of that. But in the reality is, we're seeing it still in the traditional sense, and we're seeing not a explosion of AI, we're seeing incremental bits, and we're seeing little bits. Big banks are doing the best job. But when you start talking about using artificial learning, using AI, using machine learning, to build a better mousetrap and to really look at saying, how can I reach out to a customer and show them that I'm using their information. We're not doing really well in that, and that's a concern because you look at the privacy laws. The privacy laws are not really, I don't believe, ones that you should be afraid of because of not using data properly. A consumer's going to have patience with you not being perfect on data if the customer's getting value. You know, even without an AI situation, one of my things I say in my speeches is it's unacceptable that a dry cleaner knows more about me than my bank. And my example is, I go in the dry cleaner, go to the same dry cleaner all the time. Went in the dry cleaner one time a few months ago, and the person who's at the desk said, "By the way, Mr. Marous, you become a doctor?" I couldn't figure out where that question came from. I said, "What do you mean?" She goes, "In this week's laundry, you had a doctor's smock. They had us dry clean." I laughed. I said, "Number one, if I was a doctor, I wouldn't be dry cleaning this stuff. It would be too expensive." But I said, "No, we had a celebration for my niece becoming a doctor, and we wore those." And I realized she gets thousands of pieces of clothing every week. It's not digitally input or anything else. But what happened was she noticed something different in my set of clothes, and she brought it up to me. Now, if I was to change my name to Dr. Jim Marous, just out of the blue in my bank, number one, I'm not too sure if anybody would notice. Number two, if they did notice, they may come to me and say, "By the way, you have to sign new forms in order to notify us that you've changed your name." You'd have to sign them, because that's the way they're going to say it. The challenge is they would not come to me and say first, "By the way, we see you've changed your name to Dr. Jim Marous. What kind of practice do you have? And we have some specialists on board that can help you with your business." That's what AI is supposed to do. It's supposed to notice changes, respond to them, and bring them to your attention saying, "We can help you." Just like my dry cleaner did without AI. But with what you want to do is replicate the relationship. And why not tell me what you can do for me based on that? Why not reach out to me and say, "We can make your business better. We can make your life better. We can save you time. The one thing that we don't have any extra of. How do you change the timing aspect of what you do?" And if you can make that happen, you truly have changed my life, and you've got my relationship and my loyalty.
I then sat down with Kim Forney, the CEO of Saxo Bank, to find out more about their work in blockchain. Now, blockchain has obviously been a big buzzword for the last couple of years. Do you think it has any real tangible benefits for the institutions?
Well, I think the blockchain discussions have been mostly around the cryptos, and we've never been a big fan of those. I think the people who have been investing in that have lost a lot of money over the past few days as well. So I think clearly the technology has a lot of promise. I also believe that cryptocurrencies one day will be much more relevant than they are today, but it needs regulation, it needs better technology, and also it needs basically broader acceptance, tax codes, etc., not to mention the environmentally unhealthy parts of that, right? But the technology in general, with respect to general ledgers, and I think will change the clearing and the custody side of the capital markets side. But it will take some time, and we need standards which are not there yet, right? So I think it's something we monitor, and we obviously explore on a very ongoing basis, but it's not something that has a meaningful impact for the industry as of yet.
And looking at blockchain as well, how is that part of your business?
Oh, that's going to be another, I think that's going to be a quantum shift in what we do.
Mm-hmm.
We realize a lot of our solutions reside with client groups. So one of the solutions we're looking at is currently running at 20 institutions, well embedded in their operation, but it's on premise. So what we are going to do is start with bringing those into a blockchain environment. So we have the audience, we have the technology, we have the reputation. And to us, it's a minor jump on bringing that into a cooperative structure, a distributed ledger structure, and have the banks cooperate fully, as opposed to running some component of the operation on our systems and having to track through email or phone calls with their counterparties. When everybody's on the same blockchain, then it's much easier to validate, verify, and cross-check.
And is AI going to help set you guys aside from the stiff competition that's out there?
I don't think there's a lot of competition. There's a lot of hype.
Yeah.
There are few companies that have anything proven.
Okay.
Yeah. And
so you're one of the pioneers in a way.
we have a 40-year track record. We're not, sorry, again, with all due respect, we're not a bunch of guys that sat in our garage and came out with a solution.
Sure.
We have over 2,000 financial institutions relying on our solution. And to us, that's a great source of knowledge and support that we're getting in rolling out our initiative.
Thanks for watching this week's episode of the Fintech Show. Catch you next week to find out more about biometric technology.